right, welcome back to another episode of Fedsmart podcast. Got some great information for you, lots of information, but mainly just a quick update. We were getting a lot of great questions. We did a Q&A session a little while ago and a Fegley one. We're getting a lot of great questions, and a lot of people are saying, well, I see that you and Steven are answering questions. I see your articles. I'm also seeing a lot of articles from Nick and a few other people on the FedSmart team. And Steven and I have been recording the FedSmart podcast for a really long time. So a lot of people kind of know Steven and I, but there's a lot of other people at FedSmart that help, that are fantastic resources, very knowledgeable, and help federal employees and federal retirees with all of their questions. So we real quick wanted to go through a couple more topics, couple questions we're getting. Also wanted to, make sure you hear from Nick as well. Again, some great federal retirement advisors and consultants who also work with FedSmart and go through and are meeting with tons of federal employees. I mean, it's amazing at FedSmart now. I mean, we're up to like 3 million views monthly on average on our content all over. And we get so many questions and so many federal employees and federal retirees that want to meet with us that we are just expanding, but we're very, very careful on who meets with federal employees. We want to make sure that the people that talk to the federal employees and federal retirees are as knowledgeable as possible and just great people. We have such a great group at FedSmart that are meeting with people. And, recently as a group, guys, we were all talking to federal employees, and with the, deferred resignation this year and early outs and VSIPs and VERAs and a lot of changes and a lot of things happening, there's just a lot going on. And so we've been getting a lot of questions, and we want to talk today about basically two topics, and then maybe a few more that you guys have ran into. But, we're talking about, again, the transition into retirement, looking like what that looks like. We've talked about that before, but we're seeing a lot, they've changed. A lot of agencies are already to, electronic submission on the paperwork now. And I've got some updates on that, talking to a lot of people who filled that out, and some of the information wasn't correct. And, how long the interim period is right now with so many people retiring. And then also starting early next year, there's some changes coming to the TSP that people need to be aware of. So we're going to go through those topics today, and we're going to hear from Nick and Steven and myself and just talk through those. And then, like I said, Nick, you might have a few other topics to go through. But, we're looking at the transition into retirement really quick. And just so you guys know, we're actually pleasantly surprised on how quickly OPM is processing and staying up. The interim period, we're not seeing that, be too much longer. Of course, sometimes there's the exception to the rule, and occasional where somebody's information wasn't correct and they didn't have all their SF50s in their file and stuff. But we're really seeing, the transition into retirement still being around, 3 to 6 months, and, people getting their annual leave check pretty quick. Nick, you've had a lot of people retire in the last year and a half, and then recently with the deferred resignation. And Nick, the transition into retirement, we're not seeing the backlog and the interim period take too much longer right now, correct?
No, we're seeing status change to separated relatively soon after the retirement date. And a lot of people are getting processed much more quickly than we thought. We kind of anticipated with the deferred resignation it would be the opposite, but not right now.
Yeah. Yeah, it's cool. It's nice to see that OPM's keeping up on it. We're seeing some people fill out the electronic paperwork. And even one of my clients who was in HR for 35 years and did paperwork her whole career went to do the electronic application, and a lot of her information was incorrect and it wouldn't let her change it. She had to click submit and then go back and change it after it was submitted. So if you guys are seeing some incorrect information, like your service computation date, or, they're missing like a stint of service and things like that, don't freak out. When you click submit, you're never going to have a chance, to change it again. Up until your retirement date, you're going to be able to correct some paperwork. If it lets you change it, of course, do that ahead of time. But there was a couple form fields and things that it wouldn't let her change. And then she had to click submit, and then her HR rep was able to change that. But, speaking of HR reps, from the agency, when the annual leave comes out, that the annual leave payment, that's still coming, pretty quick within, the last paycheck or within 30 days as well, with a lot of the people that you've seen retire. So there's, if the annual leave didn't come out quickly, that actually is from your agency, the HR rep pushing that out. OPM's not doing that. So just double check with your HR if you don't see your annual leave within, some agencies it's on your last paycheck. Some of them it's within 30 days.
We are
That's
seeing
kind of,
within 60 days for some people too. And then
yeah.
interim payments, like you're saying, I heard from other clients that they are starting within 60 days still too.
Yeah. Yeah. So don't panic too much if you're not seeing that. And then the VSIP payments, if you were lucky to get an incentive payment to take the early out offer, those are taken up to 60 days as well. And so we're seeing 30 to 60 days. So if you haven't seen communication from your HR within 2 months, basically, definitely the squeaky wheel gets the grease in this instance, and communicate with your HR reps and get that taken care of for you, because that's the timeline that you should see. So everybody, should have some money in savings to kind of help that transition into retirement. And keep in mind, for those of you who are under the age of 62 when you retire, the supplement payments, they don't come until OPM finalizes your retirement. Then they'll back pay you any missed supplement payments, and then they will catch you up, and then your supplement will be correct going forward. So especially those of you who are retiring before 62, it's always a good idea to try to have some money in savings, or just know that if you're past the age of 55 or you're turning 55 the year you're separating, you can touch the TSP. Like Nick said, we're seeing separated status in the TSP, usually within 2 weeks or so, kind of average. So if you need to, you can pull from the TSP to help during that time. I know that's not ideal, but just know you kind of have that emergency reserve with the TSP as well if you need, during these times. And then also, as of the recording of this call, we're recording, late October. Starting January of next year, there's a pretty long time coming change happening with the thrift savings plan. And this is going to affect everybody. If you're actively working, or if you're retired, if you're working, you're past the age of 59 and a half, or you're retired, there's some options now coming of what we've wanted for quite a while. And Steven, in January of this year, TSP is making a pretty decent change, right?
Yeah, it's been asked for a very long time because right now and before you'd have to actually contribute to have the Roth TSP. Starting January, you'll actually be able to convert. So you won't have to contribute to get the Roth. You can convert inside the TSP without having to convert to an outside IRA or contribute to it. You can actually just convert right inside.
Yeah, absolutely. So for those of you who've been asking for it for a while, now you can do it inside the TSP, right inside the TSP. You can convert some of your traditional TSP over into Roth TSP if you'd like, starting January of next year. And we're going to get more and more details. And probably in December, I would imagine we'll probably do another whole podcast about Roth conversions, as well as the ability to convert inside the TSP. Now, as always with the Fedsmart podcast, we are not saying everybody should convert, get inside the TSP and convert. There's pros and cons. There's tax consequences. As you'll see on our little disclaimer, when you roll money from traditional TSP, that is a taxable event, and different tax ramifications of new money being in a higher tax bracket if you do that. And so you definitely want to talk to somebody who knows the federal system, knows retirement, and can help you decide if you should do some conversions. And if you don't know somebody, you can go to fedsmartretirement.com and you can schedule a consultation. We can talk through the pros and cons of if you should do a Roth conversion, because we're definitely not saying everybody should be in Roth and everybody convert all your traditional money, take all your money out of traditional, put it in Roth. We're not saying anything like that. We're saying you're going to have the option. And if it's a tool, and if it's an option that you want to use and you want to convert some money, you're going to be able to. Now, as far as if you should or not, or if you think it's a good idea, again, that's going to be kind of a case by case basis, but it's nice to know that inside the TSP, starting here soon, we're going to be able to convert some money inside the TSP. So we'll stay tuned. There'll be more details on that. And again, some great resources from FedSmart on the pros and cons and ability to just talk through that with us and get your questions answered if you should take advantage of some Roth conversions. So those are kind of some big questions we've been getting recently, with all the RIFs and the deferred resignations and things like that, and coming up on the kind of the second wave of people retiring, what's happening there. And then a lot of people talking about Roth conversions. So we wanted to give you guys updates there. Now, all of us are meeting with a lot of federal employees and helping them every single week. Guys, is there anything else that we want to make sure that we cover before we let people enjoy the rest of their day before our next episode?
One thing you kind of alluded to it briefly earlier, Jesse, but one thing that we kind of have to keep reiterating, especially with so many people taking the DRP, is just the fact that you do have access to your TSP if you separated after the age of 55. So just keep that in mind, because a lot of people are unclear about that, and that's a huge component of, the decisions that you'll make going forward. And then another thing is just being aware of the Social Security benefit values at, each different age, and when you might decide to take Social Security as a part of your retirement plan. So that's a really important thing to keep your eye on.
Yeah, definitely. We can't say it enough. It's amazing how many times we have said it, and we still hear from people that didn't know this. But if you're separating the year you're turning 55 or older, you can pull from your TSP without paying a penalty from your traditional TSP. The Roth, you still want to wait till you're 59 and a half or older and have at least 5 years of having the Roth. But the traditional TSP, you can touch if you're separating the year you're turning 55 or older. And for those of you special provisions that are listening, when you're eligible for retirement, you can touch your TSP without penalty. So you don't have to wait till 59 and a half, like a lot of retirement accounts out there. So keep that in mind, that you're able to access that penalty free, like Nick said. And we've said it a million times, and I still talk to people, 58, and they're like, well, without being able to touch my TSP. I'm like, well, you can. They're like, I can. Yeah. Again, if you're 55 or older, the year you're separating, if you're turning 55, even that calendar year or older, you can touch it without penalties. So keep that in mind, guys. Keep your questions coming. We've all four been getting a lot of great questions, so keep them coming. We're happy to answer them. If we don't know the answer, which is rare, because we've been helping people for a really long time, we have the resources to get you an answer. So you can find us. You can ask us questions on fedsmartretirement.com, on our Facebook page and our YouTube channel. If you don't follow, we pretty much have all of those outlets. And so we appreciate our community. Again, guys, it's insane. We're up to like 3 million views a month on average on all of our content. So we want to keep bringing you content that helps you prepare for retirement. And then those of you who are retired, helps maximize your retirement. So keep those questions coming. We appreciate our FedSmart community so much. Steven and I, as always, will see you on the next episode of FedSmart Podcast coming out here soon. Keep those questions coming so we can keep those topics applicable to what you want to know. Appreciate you guys. See you on the next episode.
FedSmart Podcast is meant for informational purposes only and should not be taken as financial advice or tax advice. FedSmart Podcast is not affiliated with any government agency or OPM. Jesse Black and Steven Puckett offer advisory services through Integrity Wealth. Integrity Wealth and FedSmart are not affiliated. If you'd like an appointment, please go to fedsmartretirement.com and schedule a free one-on-one appointment. Thank you.